7 red flags every DIY bookkeeper must watch for. If you're doing your own bookkeeping, you might think you're safe from fraud. Think again. I'm about to show you 7 warning signs that could save your business thousands of dollars. And number 5 will absolutely shock you. Stay with me until the end because I'm also giving you my free fraud prevention checklist that I've perfected over 3 decades in this business. Hey everyone, I'm Bev, and I've been working in finance and bookkeeping for over 30 years. In that time, I've seen it all, and unfortunately, that includes watching good business owners lose their life savings to fraud they never saw coming. Today, we're diving into the 7 red flags that every DIY bookkeeper needs to recognize. Now, you might be thinking, Bev, I do my own books, so how can anyone steal from me? Well, let me tell you something. Fraud can still happen through employees, vendors, family members with access to your accounts, or even online scams targeting your business. So let's jump right in. Red flag number 1, mysterious cash shortages. Red flag number 1, your cash flow doesn't match your sales records. Let me give you a real example from my experience. I had a client who owned a small retail store. Every week, she'd tally up her sales. Let's say she sold $5,000 worth of merchandise. But when she went to make her bank deposit, only $4,200 was in the cash drawer. At first, she thought she was making calculation errors. But after this happened 3 weeks in a row, she called me. Turns out her part-time employee was skimming cash from sales where customers paid in cash and didn't ask for a receipt. Here's what you need to do. At the end of every single day, reconcile your sales with your cash drawer. Your point of sale system should match your physical cash plus credit card receipts minus your starting cash. If there's a discrepancy more than twice in 1 week, you need to investigate it immediately. And here's a pro tip from my 30 years of experience. Implement a policy where every sale gets a receipt, whether the customer wants it or not. This creates a paper trail that's much harder to manipulate. Red flag number 2, vendor payments to unknown companies. Red flag number 2 is payments to vendors you don't recognize or familiar vendor names with slightly different spellings. This one is sneaky, and I've seen it cost businesses tens of thousands of dollars. Here's how it typically works. Someone gets access to your vendor list and creates a fake company with a name that's almost identical to one of your real vendors. For example, if you regularly pay Smith Office Supplies, they may create Smith Office Supply. Notice the missing S? Or they might change the address slightly. I remember working with a client who discovered she'd been paying a fake electrical company for 6 months. The real company was Johnson Electric Services, but she'd been paying Johnson Electrical Services. The scammer had intercepted her mail, created fake invoices, and been cashing checks for $800 to $1,200 every month. To protect yourself, create a master vendor list and never pay a vendor that's not on that list without thorough verification. If you get any notification about a vendor changing their payment information, bank account, address, contact person, call them directly using a phone number you have on file, not the one on the notification. And here's something I insist all my clients do. When you're paying bills, really look at the vendor names. Don't just glance, actually read them. Your brain wants to see what it expects to see, so it might miss small changes if you're not paying attention. Red flag number 3 is duplicate invoice numbers. Red flag number 3, duplicate invoice numbers. Now, this might seem obvious, but you'd be surprised how often businesses miss this. Every legitimate vendor has a system for numbering their invoices sequentially. So if you see invoice number 1247 twice, that's a problem. This usually happens when someone is submitting the same bill for payment multiple times, hoping you won't notice. I had a client whose office manager was photocopying invoices, changing the dates slightly, and submitting them for payment a second time. She got away with it for 8 months because my client wasn't tracking invoice numbers. Here's your action step. Set up a simple spreadsheet or use your accounting software to track invoice numbers by vendor. QuickBooks, for example, will actually warn you about duplicate invoice numbers if you have that feature turned on. Also, be suspicious of invoices that have very similar amounts but different invoice numbers from the same vendor in a short time period. This could indicate someone is creating fake invoices based on the real ones. Red flag number 4, round number expenses. Expenses are always round numbers. In my 3 decades of experience, I can tell you that real business expenses are messy. They're $47.83 or $892.46. They're not usually $500 or $1,000 or $2,500. When I see a lot of round number expenses, especially in categories like office supplies, equipment, or contractor payments, my fraud antenna goes up immediately. I once reviewed books for a client who was buying a business and noticed their equipment maintenance expense was exactly $1,000 every month for the past year. Real equipment maintenance doesn't work that way. Some months you might pay nothing, and other months you might have a big repair bill. When we investigated, we found that the previous owner's son was creating fake maintenance invoices and pocketing the money. Here's what to watch for. Multiple round number expenses from the same vendor, employee expense reports with mostly round numbers, or any category where the amounts seem too convenient. Now, I'm not saying every round number is fraud. Sometimes you do pay exactly $500 for something. But when you see a pattern of round numbers, especially combined with missing or poor documentation, it's time to dig deeper. Red flag number 5 is employee lifestyle changes. This is the one that shocks people the most. An employee suddenly starts living beyond their known means. Now, I want to be very clear here. I am not suggesting you spy on your employees or make assumptions about their personal lives. People can have other income sources, family money, or they might just be good at saving. But in my 30 years of experience, I've seen this pattern too many times to ignore. An employee who makes $35,000 a year suddenly starts driving a $60,000 car, wearing designer clothes, talking about expensive vacations every month. The most memorable case I had was a bookkeeper who was embezzling from a small construction company. She started wearing expensive jewelry, got a luxury apartment, and was always showing off pictures from weekend trips to expensive resorts. The business owner noticed, but didn't want to seem nosy. Turned out, she'd been creating fake vendor accounts and writing checks to herself for almost 2 years. The total loss was over $140,000. Here's the key. Just pay attention, but don't accuse. If you notice significant lifestyle changes in someone who handles your money, it's worth implementing some additional financial controls and doing more frequent reviews of your books. And remember, the best employees want transparency and good controls because it protects them from false accusations too. Red flag number 6 is missing documentation. Documentation that consistently goes missing or gets forgotten. Look, we all misplace receipts sometimes, but when the same person keeps losing documentation, especially for larger expenses, that's a pattern you can't ignore. I've seen employees claim they forgot to get receipts for cash advances or that receipts were accidentally thrown away with coffee cups. One client had a manager who consistently couldn't find receipts for any cash transactions over $200. Your documentation policy should be crystal clear. No receipt, no reimbursement, no exceptions. And implement digital backups immediately. Take photos of receipts with your phone the moment you get them. Red flag number 7 is resistance to financial reviews or implementing new controls. Honest employees welcome transparency because it protects everyone. If someone becomes defensive, angry, starts making excuses when you want to review financial processes, That's concerning. I've had employees say things like, "Don't you trust me?" or "This is insulting," when clients want to implement basic controls like dual approval for large checks. That reaction itself is a red flag. Now, I want to be clear. Seeing one of these red flags doesn't automatically mean fraud is happening, but multiple red flags together, that's when you need to investigate. In the comments below, tell me which of these red flags surprised you the most. And don't forget to grab my free fraud prevention checklist in the description. It includes action steps for each of these red flags, plus additional protection strategies I've developed over my 30-year career. Make sure to subscribe and hit the notification bell because next week I'm sharing the exact system I use to fraud-proof small business bookkeeping, even if you're doing it all yourself. Until next time, keep your money safe.